Hi guys, welcome back. And today we are going to be doing Ethos Limited ka Q2FY24 result. We will see what the company has been doing. So first thing first, what does Ethos do? Ethos is a house of brand for watches. Whatever the Swiss watches that are there, the foreign watches that are there, these expensive luxury watches that we talk about, they sell it in India. And for some brands, they are the exclusive retailers here in India. Okay? That is one part of their business, and the other part of the business is these luxury watches when you talk about, they have high resale values, right? So anybody can go to Ethos, sell their watches. Like they do this second hand movement of watches also, where they sell some pre-owned watches. So there are two parts. Of course, right now the significant portion of the revenue comes by selling the original watches that which they collect from the house of brands that are there in their portfolio, and they sell it. Okay, and they sell it via two means. One is their offline, that is through their stores, and the other one is their online through their website. Okay, now let us go to the result and see how it has been. Okay, so nothing to complain in terms of result, right? Because revenue, the pace of growth that is there, right? Pace of growth has been intact because it is a 30% and above growth engine, and that is what it has done. Even if you see the top line, it has grown by 27% year on year, and PAT has grown up by 37% year on year. I will not compare QOQ because, as you all know, Q2 is a lean quarter. Okay, so not to compare, it will be weaker in comparison. It is not right also. Okay, so revenue and PAT both has been up. If you talk about the PAT margins that are there, PAT margin is a little bit stable at around 7.7%. So overall, a great set of result if you just have to like look at the income statement and see. Okay, margins की अगर आप बात करते हो, even margins that is there is the EBITDA is around 39%. High margin, of course, because they sell this luxury watches. Okay, now let's come to the two things. That is, one is their exclusive watches that they sell. Sorry, or the brands, like I told you, the house of brands, right? They have Rado, they have Bulgari, and Favre Luba. So all of these, what they're doing is they're selling it in their website or in their stores. Okay, that is one part of the revenue. अगर आप देखते हो, the share of exclusive brands जो है, right, that has grown. The share of exclusive brand in H1 is 31%. ठीक है, और जो revenue जो आता है जो pre-owned brands है, which means what? Pre-owned brands, these people grew at around 34% on a year-on-year basis. So not a bad, even for even your second-hand watches also. Now, if you have to talk about this, when you talk about luxury watches, right, you can't put up, like if you have to do a lot of sale via your stores, because when you talk, you're spending like around 3 lakhs to around, the watches prices can go even up to 1C. You will not just randomly buy it from website. You will have to go, and you would prefer to have that touch and feel and go to the store and buy. Now when you're putting up the store also here, you cannot put up a store anywhere, right? Because you'll have to put up in a premium location. So ultimately what happens, there is a how do I tell you, a limitation when it comes to opening the store here, because there aren't many premium locations. So what is important here is your same store sales growth, right? Because it is a value driven product. So the existing stores also has to do really well. अगर आप देखते हो कि like उनका same store sales growth जो होता है for this quarter, for Q2, it has been 23%. So great, we are having high double digit वाला same store sales growth, right? Again, nothing to complain. ठीक है. The other thing is in terms of ASP that I have to talk about. If you see the average selling price जो है, that has got a sharp increase. Okay, if you see in FY20, their average selling price was around 84,000. Okay, and right now if you compare the H1 of FY24, it is 1,87,000. So a really sharp increase. Even if you see last year, the entire year FY23 ka average selling price was 1.5 lakhs, 1.59 lakhs, right? Around 1.6 lakhs, you can tell. So this sharp increase in just, one of the reason is, if you look at their brand portfolio, like I told you, right, they have watches ranging from 30K all the way to 1 CR, right? They are discarding watches all below 50,000 and 1L, right? That is what they're trying to get rid of. Okay, so as a result, what has happened? So there is a shift in ASP one because of this. Okay, the other thing is, if you think that the volume will go down because of this, that also has not happened. Volume is never going down because of this 50K ka thing. In fact, it was not lucrative for them to be selling these kind of watches. It's 50K ka watches. Okay, so that is why they have discarded. So going forward, do not expect this kind of average selling price. I mean, of course, average selling price, as we move on to a year on year, it will increase, but not at this rate, the rate at which it has grown right now. Because like I told you, yeah, average selling price jo hai, it has come because of two reasons. One, they have discarded the entire 50K and under 1L ka watches, and because of that, the ASP has moved so sharply. The second thing is, even the volume growth that has been there, that has also come primarily from watches that is above 1 lakh and 2 lakh quantities, right? sorry, above 1 lakh and 2 lakh, these kind of watches have grown way more compared to, let's say, under 50K. So as a result, ASP has gone up. That is one thing. Take care. Now in terms of, let us go to the store expansion, jo hai, right? Like I told you, in terms of store expansion, it becomes limitation. So whatever the store that is existing there, that also has to do well, and the going forward also. So usually, if you look at the store expansion rate of Ethos, that over the quarters, I'm telling, it has been good. But this quarter, agar aap dekhte ho, they have opened only one store. Okay, like, so you might wonder, like, yeah, what has happened, right? It could come across a red flag, because why? Because if you see from, I think, the last June, like, to this June, like June to June, if you see, of 22 to 23 year, they have opened around 12 stores. Okay, and in this, after that, they haven't opened any store. Now the reason, because is, see, like I told you, right, all of these stores must be opened in a premium location. So one of the most premium locations in India, when you talk about it, what is it? It is these malls. So malls mein agar ye log open karte, which is most of the times, that is where, like, if you see Geo World, yeah, Phoenix, all these kind of malls, they open at the premium malls. Here what is happening is, they are very much dependent on the mall. Like, agar mall ka opening hi nahi hoga, theek hai, how can these people open the stores? Not only that, right, there will be so many ties, like, there's so many things and deals with the malls also. So because of this, because the mall is getting delayed in opening, that is why even their store opening is getting delayed. But having said that, you can expect in Q3 jo hai, more store opening, because they'll have to compensate. Q2 ka stores also have opened. In a way, also another good thing is, because Q3 mein kya hoga, Q3 mein is usually festive season, so sales are usually higher. So in that way, the store can become profitable way faster than compare, let's say, Q2 mein start karo ke depreciation high hoga and sale bhi itna nahi hoga. Even in terms of, agar aap dekho unka stores ka, like how do they have to break even, right? All of the stores that have opened, in that, some of them, sorry, in 12 months, like I told you, right, June to June, right, they have opened 12 stores. All of them have break even, right? So you can imagine the amount of sale that they do here. The fact that, not just value, but there is also volume ka game bhi chal raha hai yahan pe. That is why, in a span of 12 months, they've been able, all these 12 stores that they opened have been able to break even. Another interesting fact is, these 12 stores that they've opened June to June, some of these stores have been they've been breaking even in a span of 3 months. Because, see, why am I stressing on this so much is, one, they have to, like I told you, they have to open in premium location, because they're selling a premium product, which means what? Your rent inherently is going to be higher here. That is another thing. The second is, when you have to go to, because you're selling a premium watch, you have to sell that premium lifestyle also, right? Like, you can't open like a Tabore kind of shop inside that mall and be like, no. So you'll have to spend again more on your aesthetics and interiors and everything, right? So as it is, that is why I'm telling, the fact that these stores can get break even at such a at such a short period of time is really something fabulous. Now, the other thing is, in terms of their brand portfolio, like I told you, these people sell other people's watches, right? And which means what? They have, the more number of brands that they have, the house more number of watch ka brands that is there, it is better for them. It is like Amazon. It is like being Amazon for watches, right? Now, if you go to Amazon, one of the reasons you go there is because it's a one-stop shop. Similarly, let's say if I go to Ethos, and if I have the options, let's say I might not be buying a certain kind of brand, but if I know there is an options of plethora of brands that are coming, it makes me, it is better for the customer. So it is important for Ethos to keep adding new brands in their portfolio, right? Right now, if you see in this, and we have seen every quarter they're adding one or the other Swiss brands that are there. Right now, if you see in Ethos, they've added 4 new brands. One of these Swiss brands is, I might be completely butchering the name, so please forgive me, is Ulysse Nardin. That is one. They've also signed with another 3 other Swiss brands. All 4 are also Swiss brands only. I think Nevada, Gerald, and Chrono Swiss, right? So these 4 are the new brands that they've opened. And the one store that I told you, right, they've opened this quarter, like only one store, that is that Rimowa. Their first store in terms of Rimowa, they've opened in that Geo World Mumbai. And another interesting fact is this Rimowa ka brand that is there, that they have opened an exclusive store they've opened in Geo World Plaza. It comes under the LVMH brand portfolio. What is LVMH? Louis Vuitton and I forgot the M&H abbreviation. You can just Google it. So So that LVMH ka brand portfolio, it just shows you that, these people are, not just trading with, the normal Swiss brands that are there, which could be posh from an Indian perspective, but also the really reputed and well-known brands like LVMH. In terms of luxury, it is not a small deal, right? So that is there. So the other thing is, like, people think usually in terms of demand. Let's talk about demand. People think like, ye luxury watches jo hai, it can be sold only in T1 cities, only in metro cities, right? But that is not the case. It is not just sold in T1 and T2 cities. If you look at Ethos, I think they opened a store in Indore also. They're telling that T2 and T3 cities may also, the demand is extremely strong, because usually you would think, like I told you, right? They discarded that 50K ka less watches, right? Especially the 50K ka watches, they're trying to get rid of it. Now people usually think just because the 50K ka watches, they got rid of it, the T2 and T3 cities ka demand will be impacted. But that has not been the case, because agar aap dekhte ho, especially in places like Ludhiana and other T2 and T3 cities, that 50K to the 3 lakh watches are the one that has been most sold, right? Again, coming back to the point why it doesn't make sense, because no, this whole under 50K that was there, it wasn't making any sense to them to sell, because again, like I told you, it hasn't been adding them. And one of the reason also, because T2 and T3 cities it is increasing, is because disposable income will increase, and as the disposable income increases, you will have more affluent customers and more HNI, right? That is there. So now let's just go finally and just check in terms of cash flow. I think one thing that has happened over the quarter, I think after before Q2 little bit result has come, is they raised cash, right? They did a QIP, and they raised, I think, around 165, not 165, 175 crores, I think. 175 crores or they raised via QIP, right? One of the reasons why they did was they need to increase the number of stores. They want to do that. They need cash for that. And the other thing is, they see, when you talk about these Swiss brands that are there, I reiterate in my previous videos, these Swiss brand, how do they work on? How are they able to give you that premium feeling? They give you that premium feeling by scarcity, right? What does scarcity here means? There is a lot of demand, but my supply is very less. So as a result, that premiumness, that to own that watch, that thing goes higher. The demand for that watch automatically goes higher, because the brands that create that scarcity. Now, kya hoga? Ethos is the only retailer probably in India, exclusive retailer in India. But there are different exclusive retailer in different parts of the country, in different parts of the world, right? China may exclusive retail hoga for the same Rado brand. Probably in some part in US, somebody else is an exclusive retailer. Okay? So what has happened now? Everybody wants to sell this Rado watches, right, to their customers, and they want to increase their profitability. Ethos ka apna profitability increase karna padega. China ka jo shop hai unko. So what they have to do, when there is limited amount of watches, they don't know if they will be able to sell it to a customer or not, but they have to grab it, because once they don't grab it, then that goes out of stock, and then your customer will come, and who would come to your showroom and see like, oh, there are no watches, there's nothing, you won't be able to do it. So as a result, because they have to keep this inventory always with them, because you never know which customer is buying what, that is one of the reasons also to back up on the inventory and also do the store expansion. They have done this QIP. Okay? Agar aap cash flows dekhte ho, cash flows is of course one thing is ROE. You will see, and because I keep always telling ROE ka trend dekhte raho, the ROE over the years has to increase. You will see that the ROE has come down, but ROE to niche aayega na, kyunki aapne QIP kiya. ROE का फॉर्मूला क्या है? नेट प्रॉफिट डिवाइडेड बाय इक्विटी बेस बड़ा होगा तो ROE तो घटेगा ना, बिकॉज बोथ आर इनडायरेक्टली प्रोपोर्शनल एट द एंड ऑफ द डे. ठीक है, सो दैट इज वन थिंग. इन टर्म्स ऑफ अगर आप देखते हो कि लाइक the balance sheet तो is clean, there is no asset liability mismatch, debt भी उतना ज़्यादा नहीं, जो भी debt is lease liability. Makes sense. Again, like I told you, these people have to open shop in the premium locations such as Phoenix and other places like Geo World Drive, like we are talking about. यहाँ पे तो rent high होगा तो lease liability, जितना आपका stores expansion होगा उतना आपका lease liability भी बढ़ेगा. ठीक है, that is one thing. The other thing is in terms of cash flow statement. अगर आप देखते हो, net cash flow is negative. ठीक है, and it is completely fine, because see, it's not that because it is a small company, और जो भी ये कंपनी कर रहा है, they are infusing back to its growth, right? Like जो भी उठा रहा है. So you think about this. Let's say you have around 50 lakhs lying in your FD, ठीक है, and your daughter has to get married. You already have cash, and this cash, you would rather use this cash for something useful like your daughter's wedding or your daughter's education, and then let's say going out and taking a loan, right? What makes more sense? So it is the same logic here. The company has cash, and they're using this cash to fund and like to increase their growth even. And that is what is happening. So whatever they are making out, they're again infusing it back to the business, either by store expansion, buying more watches inventory, investing it in other means. This is what that is the reason why the CFO is negative. अगर आप देखते हो कि like उनका cash flows में अगर आप detail जाके देखते हो, there also you will see that the majority of cash is stuck in two places. Either it is in inventory या capex में. There is no other place. So it is absolutely fine here. In that case, if a company that is a growing company is investing back in its growth, or CFO negative ho raha hai. The other thing also, like, the management that has been very clear about this, like when I think a person, an analyst asked in the con call, and they were like, look, it's okay if my CFO is negative, because ultimately I'm focused on growth. I have to grow my operations, and I have to grow my operations. I want to, like, this was, I think, the CEO, because he wants to grow the business at 30 to 35%. इसके लिए मुझे, I'll have to do what I have to do. So CFO negative होगा तो होगा ही, क्योंकि मेरे को पहले मेरे धंधा को आगे बढ़ाना है, ठीक है. So that is the reason. So do not just go by the bookish formula कि like, CFO is negative, so automatically. So usually what people do is CFO देखते हैं investing, and they see the net CFO, and they minus it, and they say, oh, free cash flow is not there, so company is automatically bad. But people do not understand कि like dude, like if the company is ultimately funding for its growth, how is it bad? Okay, so you would rather want the company to take debt and unnecessarily take debt, rather than using its own using its own money. So that is the thing. So it's everything, when you see, right, it's a case to case scenario, right? You can't just go by a formula. Everything is a case to case scenario, and you will have to look into that. Okay, so having said that, that's it about Ethos. Nothing to complain. Great results. Everything is on track, when it comes to their store expansion rate, when it comes to their acquiring other brand portfolio, even when it comes to, even the pace of growth, maybe koi bhi gadbad nahi hai, right? All is good. Now what remains is, the Q3 is also as probably stunning as Q2, or even more, probably better. That is where it all lies in. Otherwise, we have to constantly keep tracking a business. There is no business that is forever good. There is no business that is forever bad. Any bad business can turn good, and any good business can also turn bad. So it is our duty as investors, like I always tell you, keep tracking the business and put your money where, let your money always be constantly working for you, and just keep tracking, right? So having said that, that's it about Ethos, and I'll see you again tomorrow. Bye.